Hey everyone, CryptoFree here. Thank you very much for joining me on today's episode, and let's get right on into it. We're looking at Bitcoin on the hourly chart here, and as I mentioned in yesterday's video, Bitcoin was within this horizontal triangle, and that because it was getting close to the end of the triangle here, Bitcoin was going to make a big move, whether it go up or down. I was showing some potential targets where Bitcoin could go, provided that there was a confirmation and volume supported move. Now, Bitcoin broke down, and I said that the potential target, should Bitcoin break down, was based on the width of this triangle here. The target for Bitcoin would have been about approximately 25,700 or so. Now, what I did say though was, in order for the trade to proceed with such a trade, you would need to look for volume and also if there was a confirmed breakout. Now, this trade I actually did do, but I waited until Bitcoin actually come back to the resistance line once it broke below the support line of this triangle. So I did actually attempted the trade right about here, and because that was a confirmed movement back up to the horizontal triangle here, and I did attempted a short, and it was actually doing fairly well for that period of time up to about here, around 12 a.m. or so my time. I'm from Toronto, and so at that time actually it was getting late, so I actually went to bed. So what I did is I put my stop loss right at my entry point, which is around here, which I was thinking Bitcoin would continue moving down further, but Bitcoin bounced and then head back up. So I did get out of the trade, but at least at a zero loss. And I would always recommend for you guys, whenever you do a trade and the trade is going fairly well in the direction that you anticipated, always bring your stop loss at least back up to your entry point. So in case, like in this case, Bitcoin goes south and doesn't go in the direction you think you will not be at a loss. So looking at Bitcoin now, it does look like it's creating a new trend line here, going bouncing between this trend line here. But seeing that Bitcoin is not going back up to the horizontal triangle, I would say the smarter move would be actually just to bring the trend line down and extend this horizontal triangle or symmetrical triangle further, because at this point Bitcoin is clearly consolidating here, bouncing between support and resistance. And where Bitcoin will go, well, quite frankly, all we have to look for is where is Bitcoin going to potentially break out next. So at this point here, I wouldn't recommend any sort of trade at this moment based on this new formation here, or I would just say more updated formation, until there's a break, whether there's a break up or a break down. And again, based on that, depending on if there's volume and if there's a confirmed like break up and then confirm on the either the support or the resistance line and then bounce back up, then I would recommend getting into a trade at that point. So that's where Bitcoin is at the moment. It is continually consolidating at this point. And now I have these red lines here, and what are these lines in regards to? Well, I'd like to bring up this article here written by Joseph Young. Now, who is Joseph Young? Joseph Young is an analyst and investor, and he writes articles for Forbes and Cointelegraph. He's a pretty well-respected individual in this crypto space. He's followed by some big names, Glassnode, Carl from the Moon. You know, these are all big guys here following this guy. So I would definitely heed to some of these recommendations that he has written in this article. Now, as the title goes, the case for Bitcoin price dropping to 27,000 in a possible bearish scenario. So he's not saying that there is indeed going to be a breakdown to 27,000, but I think it's great for us to take heed and take note of where are some potential areas to look out for should Bitcoin start dropping. Now, in this article, he states that the potential drop to 27,000 is conditional in that BTC would have to break down below 30,500, where it strongly bounced from on January 11th. So that 30,000 would be about here, 30,500. This, which is the first red line here that I've drawn for you guys based on that article there. Then furthermore, In the foreseeable future, there are three key technical levels at play for Bitcoin: 34,500, 30,500, and 27,000. 34,500 has been acting as a critical support area throughout the past 72 hours. Each time Bitcoin dropped to this level, it recovered fairly quickly to around 36,300. If 34,500 breaks, the next major support level is 30,500, which is where Bitcoin recovered from the big correction on January 11th, when 2 billion worth of future contracts were liquidated. So these are the three key areas that Joseph is saying that we should definitely keep in mind: 34,500, 30,500, and 27,000. And actually, all these three support levels are essentially from the fib retrace here. So if I bring out the fib retrace tool and we start at the low or the base of this flagpole and go up to the swing high there, you can see that these red lines do indeed coincide with the fib retrace levels here at the 0.382 level, the 0.618 level, and the 0.786 level. So these are some key areas for us to keep an eye on. Again, it's great to see that Joseph is just looking out for us and just mentioning these support levels, key support levels, that should Bitcoin break these levels, while these are the areas that Bitcoin could be ending up. Next up I have here is DeFi Explosion. Binance DeFi Index hits all-time high as a total value locked eyes 25 billion. So I want to share with you guys this because just to diversify and not talk about Bitcoin all the time. DeFi is huge, and it really exploded in 2020 and into 2021 here. The decentralized finance sector continues to grow with an impressive all-time high of over 24 billion locked. Additionally, the Binance DeFi Composite Index measures the performance of numerous DeFi coins, also marked a new all-time high today. So it's great that there's a tool provided by Binance for us to see in terms of how well the basket of these DeFi investments are doing. It was launched in August of 2020. The DeFi Composite Index tracks and measures the performance of a basket of DeFi assets. And the composite index indices are combinations of different underlying instruments intended to measure the overall market or subset performance over time. The indices price is usually calculated as a weighted average price of the components. So within this basket, some of the coins with the largest shares in the index include Chainlink, Yearn Finance, Maker, Uniswap, Aave, Synthetics, Compound. These are some of the largest altcoins within this index. But if you are new to, if you're new here to the crypto space, and you wanted to invest into some of these altcoins, it would be pretty difficult to it would be difficult for you to invest into and keep an eye on each of these different alternative coins. But what I would suggest, and this is what I would do and what I am doing, is because I don't really have the time to invest into each individual altcoin, and with that track its performance and so forth, what I would do is actually find what is the common denominator of these alternative coins. And all of them essentially rely on the Ethereum blockchain. And with that, because it relies on Ethereum blockchain, that really sums up in terms of what you can invest into, because Ethereum is the second largest cryptocurrency behind Bitcoin. And although it's an altcoin and can be just as volatile and speculative, it's the number 2 crypto. And with that, you have a better sense knowing that all these alternative coins rely on the Ethereum blockchain. So with that, it just gives you a little bit of peace of mind, and also just one alternative coin for you to focus upon, as opposed to investing all into these individual ones. Now, of course, the returns can be phenomenal, but again, if you're new to this space, and just to make it easier for yourself, I would go for something that everything else relies on, and that is Ethereum for this within this DeFi space. And another reason for that is that if you look here in this article, retail interest in Ethereum skyrockets as small ETH addresses on the rise. The interest in Ethereum from retail investors has skyrocketed in the past few weeks, apart from the Google searches reaching all-time high levels beyond 2017 to 2018 craze. The number of wallet addresses with relatively small ETH portions has seen new records as well. Ethereum searches on Google saw unseen highs during the 2017-2018 parabolic price increase when the asset skyrocketed to its all-time high of 1450. The worldwide Ethereum Google searches have exploded in the past few weeks and marked a new all-time high as ETH was marching onto a 4-digit price territory. So I just brought up here on Google Trends just so you have a clearer view. So back in the 2017 run, the Ethereum search was 88, and now it's projected up to 100. So that's really great to see. A lot of people are indeed looking up Ethereum, looking into Ethereum, seeing that Bitcoin has surpassed its all-time high, and Ethereum still hasn't passed its all-time high yet. If we take a look at Ethereum USD pair, we could see that Ethereum is currently sitting at about $1,233, its all-time high being about $1,350, around there. So what a lot of people are considering is that they're thinking they've missed a boat with Bitcoin, since Bitcoin has well surpassed its last all-time high of 20,000, breaking double that, and are now looking at Ethereum as the next possibility to get some major gains right now, because it's below its all-time high. And if it was to break its all-time high, well, as I shared in my previous video, that some analysts are seeing that Ethereum can easily double within 2 weeks, within a 2-week period, should it break its all-time high. Furthermore, within that article, it states here, another reliable sign of the growing appetite of retail investors are wallets with relatively modest Ethereum holdings. This is where data from Glassnode shows significant upticks and records for non-zero addresses and wallets with 0.01 ETH and 0.1 ETH. The non-zero wallets have been gradually increasing since 2018 and recently broke above 50 million. The new all-time high came at nearly 52,500,000. And we can see here addresses with at least 0.01 ETH surged past 11 million. And in this chart here, we see lastly, the addresses with 0.1 ETH or more have also marked a new record of over 3,715,000. That's what I wanted to share with you guys today. And if you enjoyed today's video, please give me a like or subscribe, as it would really help the channel out. And if you think someone would gain some value from watching this video, please share it with them. Thanks again for watching, and have yourself a great day.